Good morning, good afternoon, good evening, and welcome to Steve Miley on the call for Trade Day with the Bull versus Bear webinar for Tuesday, the 25th of October. I'm going to be a fairly quick run through in here today, guys. I'm going to put about a 15-minute limit on this. I'm due to another commitment, I'm afraid, but there's not a huge amount to say, to be quite frank. So we have had some German business expectations data out, better than expected in here this morning, and a piece of data that's not quite picked up in here. We have, where are we? I've got it in here. So UK factory price expectations. Okay, so this is hidden in the CBI survey. So in here, that is actually on here, but we haven't got the details. So CBI industrial orders in here, and if we go take a look at this here, so British factory inflation expectations for the coming months fell in October, lowest level in more than a year. So again, some signs that price pressures, inflationary pressures are easing slightly. Altogether, certainly a positive on that. And we certainly remember, to some extent, you could argue the UK has been leading, global inflation amongst the major economies, with, hitting double-digit inflation, prior to most other economies, certainly compared to the US and the Eurozone, and also taking longer to roll over. So, that's definitely a positive. Remember, it's only factory price inflation, but obviously that factory price inflation does feed through into real price inflation. Okay, so that's certainly a positive. It's kind of hidden away. It's not actually on the headline data, and it's kind of hidden away in the CBI Industrial Trends Survey. Coming up today, nothing really huge in here. We do get Fed Waller speaking. I think we're right on the edge of I think it's 1 week, the embargo of Fed speakers in here, the blackout period. And obviously Fed meeting next Wednesday. So I think this is probably the last day of Fed speakers. We're going to get Waller speaking later today. Nothing else of any real serious note coming out of the US on the macro fundamental side today. But if we go and look at earnings, a very big day in here. So we've already had a string of earnings in here through the day. However, so you can see a big day, and it's a big week this week and next week, big week in here. And this is even with the filter on, right? So I've got the filter on in here, only with the big boys in here, like the 3 stars, so the larger caps. And even with that filter in here, look at all the companies reporting, right? And it's kind of mixed in there, as you can see, green and red throughout today. Amongst the top end in here, this has been sorted by market cap, so the big boys are at the top. Coca-Cola out, beat expectations. United Parcel Service, UPS, beat and missed, beat on earnings, missed on revenue. And then you get in further down in here, you're getting obviously much smaller companies as we go further down. The big boys are up here after the bell, though, today. Microsoft, Apple, and to a lesser extent, Visa. Certainly Microsoft and Apple. Sorry, not Apple, Alphabet. Excuse me. Forget that. Not Apple, Alphabet / Google. So we've got Microsoft and Google reporting after the bell this evening. They are going to be critical, I think, for some directional leadership. And then also going on, if I just go to tomorrow, we've also got Meta tomorrow, okay, and then I think just after that, I think we've got Apple and Amazon Thursday, Friday, right? Thursday, Apple and Amazon on Thursday, Friday. So a big 3 days: Microsoft, Google, Meta, Apple and Amazon reporting Tuesday, Wednesday, Thursday. So 3 really big days for stock indices. A question from Clinton, actually, while we're on earnings. Steve, so how is everyone beating earnings estimates in a recession with consumers having less disposable income? I'm going to say that it's because the estimates underestimated inflation, so the dollar amount is higher, but the relative value is less. It might be a little bit of what you're saying there in here, Clinton, but what you got to remember, the estimates are building in, right? The estimates are lower, right? These estimates, these consensus estimates, come from the research department of investment banks, who are super smart guys, who this is their job and this is what they do. So the estimates, and the consensus numbers are all lower than they would have been 1 or 2 years ago, right? So the numbers are lower. All these estimates and forecasts have been ratcheted down already. Okay. And so, particularly if we're moving on the downward side, there's a chance, that then the analysts are being more pessimistic. So in here, the analysts are being more pessimistic than the corporate, and that is often the way. The analysts kind of try and be more to show a reality. Maybe the corporate's not quite showing the reality, right? So there is a lot of stuff goes on with accountancy, right? So I would say what's going on there. So it's not that that all these companies are doing really, really well in the economy, and then we're going into a potential slowdown recession. Yes, we are going to slow down, but these numbers, if you compared the numbers, the actual absolute amounts are going to be lower than they were 6 months ago, 9 months ago, 2 years ago, right? When we were in a boom time, right? So that's the reason why they're beating estimates. It's because the analysts have ratcheted down more aggressively their predictions, and so that brings the consensus number down. And so then what's happened is that we kind of end up beating the estimates. Okay, so the things are not quite as bad, and there could be a thing that's been ratcheted down. And as you say, though, to an extent, right, that things aren't quite as bad. They're not panning out as bad as the analysts expect. Okay, let's face it, the consumer is still relatively strong, right? Yes, they are under pressure, but the US consumer and the global consumer is still relatively strong. We're still seeing good retail sales numbers. We're still seeing good consumer confidence numbers. So despite the high inflation, despite the higher interest rates, and the labor market is relatively tight still, so it's relatively easy still to get a job. So people don't feel vulnerable, so they're still spending, right? There probably will be a time where the labor market becomes looser, and then it becomes harder to get a job, and then people are more worried and start spending less, and then that has a knock-on effect. Okay, but at the moment that's not necessarily happening. So I hope that makes sense. I hope that's a good enough explanation for why. Okay, so earnings, yeah. So after the bell is going to be critical tonight. Microsoft and Google. 5 things to start your day in here. So we have in here big banks earnings, eventful day for HSBC. Oh yeah, so HSBC. So we did have that in here this morning. If we go down, and obviously that reports from the UK in here. Beat on revenue, only just missed though on their earnings per share. Okay, so not too bad in here. It was an eventful day for HSBC. It's beat estimates thanks to stronger net income. Named a new CFO and revealed that it boosted its loan provision by 200 million. So generally kind of quite positive in there. Higher into UBS also beat profits in here. UBS not on our list there. And then in the US, we get the tech names here. The Federal Reserve among saying that are now sitting on paper losses on their massive bond holding with obviously big bondholders, having through the quantitative easing. So Treasury, the Fed is holding a lot of bonds, and obviously bond prices are going down. New Prime Minister announced, confirmed in the UK, as we fully expected. Rishi Sunak got put in place today. US equity futures slightly low this morning, but not aggressively lower, having had a relatively strong day yesterday and pushing up into some really important resistance zones. And we'll talk about that and just setting back from those resistance zones. And US futures edge lower as earnings flood in. So yeah, it's a big week for earnings. US equity futures decline with earnings in focus. Yeah, we know all of that, done all that. So China had this big sell-off on Monday after the party conference at the weekend. Market and saying, so look, more market unfriendly policies during President Xi's third term. So President Xi put himself in position for a third term, expecting market unfriendliness, and then that saw the Chinese stock market see a significant sell-off on Monday, a historic sell-off. I've seen historic sell-off a lot, but I don't know in what way it was historic. But in the, was it a percentage? I don't know exactly. I haven't seen the data on that, but nevertheless, a big sell-off on Monday didn't really have a contagion effect. We didn't have a contagion effect that followed through into US, European, and the rest of Asian indices, and they kind of had a slight bounce in here, China overnight in here, but the Chinese yuan continues to push lower, its weakest level since December 2007. So the currency bearing the brunt of that from the markets. We've already spoken about the factory prices there, and then we've already spoken about Alphabet and Microsoft lead the earnings going into today. And this is just a poll from Reuters, but so expecting a 75 basis point, no surprises there. We go to our Fed tool. That's exactly what it tells us, nearly nailed on for the 75 basis point. But this Reuters poll also then tells us in here that economists feel that the Fed should pause when inflation halves. So expecting a pause once inflation halves from the peak. Okay, so that's what they're expecting. And so we're looking for a 0.75 point. Yeah, we know that, and that's the poll So just kind of something I thought more interesting than anything else there.
Considering that the Earth's forest
we don't
cover as
want
much
that
as
playing.
30%.
I'm going to get rid of that. I'm going to close that down. Right. So what else do we have in here? European exchanges kind of mixed in here this morning, overnight since last night. The CAC, the French index, is up a third. The German DAX is down 3/4. The FTSE is down 2/3 in here. So kind of mixed bag in here from Europe this morning. And US futures having rallied up between 1 and 1.5% up yesterday. We've dipped by about a third this morning, although the Nasdaq actually holding in at relatively unchanged. Right, given we're pressed on timing now, I'm just going to move straight onto the charts. Oh no, I didn't want to hit that. Oh no. Let's go back. Oh, good. Right, here we go. So we spoke about the market in here yesterday, where there's the big impulsive rally from Friday. We spoke about it trying to defend the 50% level. It defended that. We did get a sell-off, but then a significant rebound from just below the 50%. Sorry, this is on the Nasdaq on the 15-minute chart. So we just poked below the 50% level, went back up very close to the highs, didn't make it above the highs, but you can see Nasdaq in here are outperforming, sitting right overnight close to those recent highs. My view is, and we've had a little rebound. We've had a dip down in here and then a rebound and then a dip and another rebound in here from around this support area now established around 11, like 440, 430. Okay. So a break below there will set up a more negative tone, aiming us back towards yesterday's lows. But my view is, we've visited 1, 2, 3, 4, 5. The market keeps coming back and revisiting this resistance, okay, during Asian hours. And it looks like it wants to have a go. Now it's this resistance. Whether it can do that through before the earnings this evening is a question, but I think it probably can. And really critically, if we go back to the daily chart in here, you can see the market's just hovering above these swing high up here. This swing high, 11,505. We take out the overnight high, it can easily have a go at that. Whether it can have a go at that one there, sorry, not 11,505. Scrap that. 11,729. 11,729.75, nearly 730. Okay, so 11,730 is the potential upside target. I'm not sure if we can get above there before Microsoft and Google, but I think it could easily have a go. So that would be my target in here. And if we go and take a look at the S&P, more interesting in here. So a little bit weaker overnight. We dipped down towards this level here, and then we dipped and then held though. Look at this little swing low here. Again, yesterday we went down through 38.2, held above the 50, and then on the subsequent decline we didn't even go back to the prior overnight low in here, and then we did make a new high, and then we've held above. Then we did get a more significant dip, but it held above this little low here. So that little low there is 37.87 we held there at 37.90 and rallying again. Now, more importantly though, for the S&P, if we go to the daily chart, my two levels in here, these peaks up here. So the peak up here was 38.20. Okay. And then this failure peak here was 38.33. Those are my two levels. If you go and look at my reports, 38.20, 33 is my kind of key resistance area. Now we went right into that yesterday up to 22 and fell. So we went just above that peak at 20, couldn't accelerate. And that kind of reinforces to me that 33 level is important as well. So in here, the market got above 20 to 22 and then faded, but has held up fairly firm. My view is we have another go at 2022 and then potentially 33. And if it can take out 33, then we could easily see another acceleration. That acceleration probably won't come until after the bell though. For the day trade though, I think we can have a go at 2022 and then 33. Whether it can get all the way up here, so this is adding on another 100 points in here, really up towards so we're up at 35, 37 up here, right? I don't think it's going to do that over the next couple of days. I do think it can be up there, given that we get Microsoft and Google pointing in the right direction, right? So that's going to be important. Seeing what those two do. And then obviously we've got the other big tech coming over the next 2 days as well. Meta, Amazon, or tech/new era, Meta, Amazon and Apple coming Wednesday through Thursday. But certainly that's signaling a better basing pattern. You've almost got like in here, I know we had this big spike lower. That was that turnaround day, CPI day, the 13th. Okay, really big day in here. That's the day I said, the bottom's going in. You could argue that, if you ignore the spike, which I'm not saying you do ignore the spike, but then you've almost got a double bottom in here, right? Low, low. And you confirmed the double bottom yesterday by just prodding above 20, 38, 20 to 22. Now, I think it needs a bigger confirmation, but bigger picture, this looks really positive in here. And if I go to back to the intraday, we did make a high above the previous peak there from Friday, and we've kind of held there. And then we did test more to the downside of the S&P. We're down on the day at the moment, but again, it held that little support there and rebounding at the moment. So for me, it's all upside risk in here for the stocks. A real brief nod, and it will be brief nod to gold and oil. In here, let's go take a look at oil first of all. A negative day. We've had these two dips and rebounds of quite a negative day in here so far today. But for me, it's still a chop fest. It's kind of holding all these recent lows between 83.16, 83.00, and then down at the very low in here around the 82.60s. It's kind of holding there. Whilst holding there, probably looking for mean reversion back into this range. It's been choppy back into the range. It's been choppy in this kind of range environment now for some time. So towards the lower end of that range, looking for maybe a base to appear and for this to push back up into the range. If I go on to gold, in here, having had a strong recovery, a very strong recovery back on Friday in here, the market then setting back yesterday, a little failure and a dip in here. I think this is a buy opportunity on gold, and you can see the market trying to turn in here at the moment. It held, look, incidentally, right here at the 61.8. This is the move up from last Friday. Remember, it made a new low last Friday. We went below the low here from the low from September. We went below the low. Big bullish rejection day. And if we go and look at that whole rally now, for gold, right from that was Friday's big rally from a new low. If we look at the 61.8, the market's held there twice. You can see, look, dipped overnight, or in European hours in here, tested this 61.8, which comes in around 1642, dip just below there, and back higher. So for me, again, looking to play this from the long side for gold. Right. I'm going to wrap it up there. I'm going to wish you all a great trading day. Please do stay safe. Don't forget, we have this Trader Mind session in here. Please do try and get on that. We have the Trader Mind session coming up tomorrow. That's at 10 o'clock Central, 11 o'clock Eastern, 4 o'clock UK. Okay, so I hope to see you on that. We'll speak to you before then, though. I will give you a reminder on tomorrow's webinar. Until then, take care and stay safe. Have a great trading day.